Hello, one and only. Hello, everybody. Today we're talking about how to invest better. Okay, so I got inspired. There's these guys called the minimalists, and one of the dudes has a free ebook that he released called How to Write Better. It's a very short, concise book on how to write better. Well, I thought let's expand upon that. It's a very simple title, but what if we steal it a little bit? I'm pretty sure somebody's had their own version of this, but I decided to take the same template and called How to Invest Better. Now let's take a look at the ebook that I published on my website. Oh, we got my son, Ty Lord, and we have Krishna YT. Hell yeah! And we got two people already. So yeah, what I'm talking about today, though, and I'm excited to announce this, but this is the first ever released ebook on my website. It's not a big book. It's literally 2 pages. One of the reasons why I wanted to release it as a PDF file was because, one, I wanted to feel what it was like to release an ebook, even if it was very tiny. I believe sometimes the feeling of doing something by doing it, even if it's on a smaller scale, is worth it. And it's kind of cool. So now people can download the ebook. You don't have to give any email addresses or nothing like that. We don't gather emails. We don't try to do any of that. I probably should, though. It'd be smart of me if I actually fucking gathered emails, but I don't. I just want to give away knowledge for free. And so we're going to go over it together. I figure since it's a free ebook, I might as well go over it together for those of you who don't feel like reading it on my website or don't feel like downloading the I mean, literally, you could just read it right on the website. So it's garzamedias.com. But the link is in the description below for this video. But we're going to read it together because I'm pretty proud of this. You know, this isn't the greatest work I've ever accomplished by any means, but it's exciting to be able to do this. So without further ado, hold on, let me try to get this figured out real quick. Sorry, guys, I'm figuring some shit out. But yeah, no, it's really fun. It's really cool to actually be able to publish an ebook. I do plan on putting out small ebooks, nothing crazy. Like, we're talking about maybe 10 to 15 page ebooks on, maybe how to do something a little bit better, maybe giving good tutorials, something very concise. But I think concise is good. I think these days we have too many things that are a little bloated when it comes to the world of ebooks and all that shit. Let's see. All good, Mac Daddy. Hell yeah, dude. My son. I'm not gonna be on for too long, but I'm gonna be on long enough to kind of go over the ebook with you guys together. It's very short, very simple, very sweet. Let's see here. Give me 1 second, folks. I'm having some struggling a little bit. I'm trying to pull it up on the PDF file. Hold on. We'll just look at it in we'll look at it in Edge. That's fine. Look at it in Edge. All right, here we go. All right, dude. Microsoft Edge. Here we go. All right, we're gonna watch this here. Now, like I said, the ebook is actually, there's a link to the ebook in the description below. Free ebook. All my knowledge I try to give out is free. You don't have to download the ebook. In fact, you could even read the ebook literally on the website. It's embedded, so it's pretty cool. So you don't even have to be obligated to download the whole thing. It's only 2 pages, so you're not really downloading much. All right, let's begin. All right, here we go. So you guys are going to probably have a little trouble seeing this, to be honest. I might have to zoom in a little bit. I might even have to make this a little bit bigger. Hold on. Here we go. All right, so how to invest better. So, we are all investors now. Whether you're contributing to a 401k, buying index funds, or even trading individual stocks, you're making decisions about your financial future. No matter your current knowledge level, here are some practical tips to help you invest more wisely. And these are pretty simple tips to implement, by the way. So 15 ways to invest better. Number 1, think long term, not short term. Look, trying to get rich often leads to poor decisions. Focus on building wealth slowly over time. Now, hold on. Oh, sorry about that. Now here's the thing. Know what you own, all right? So understand each investment in your portfolio. You know, what it is, how it works, and why you own it. Those are very important concepts right there. As long as you know what you have, really, at the end of the day, how can you fail? How can you fail? And honestly, I know what I own. And here's the thing. All I know is I believe that my assets are more important than saving my assets is more important than saving my money. That was probably the greatest investment lesson I ever learned in life. I will say that without a doubt. Number 3, avoid timing the market. Look, it's very tempting to time the market. Look, even the pros get it wrong. All right. Time in the market beats timing the market, meaning this. You owning stocks, for example, is more valuable to you. Just owning stocks over the long term, never selling, buying, never selling, and keeping it that way over the long term is better for you and just overall. Better for your mental health, just better in general. So, yeah, make sure that you're at least staying in the market, you know. Another thing is to diversify, but don't diversify. Now, you're probably wondering what that means. So, spread your investments, but make sure they are still quality assets, right? Basically, spread out your risk. Don't put all your eggs in one motherfucking basket, all right? You gotta still have good companies, for instance, in your portfolio. Let's see. Krishna says, yeah. Tim Smith says, I sold all my stocks on Friday. Tim, no! I hope, Tim, I hope you're joking, my man. I hope Tim is joking. But then again, I'm not sure. I'm always going to be in the market for now until forever. Let's see. Embrace index funds, all right? So here's the thing, man. Low-cost index funds provide instant diversification and typically outperform active managers. So here's the thing. Just you buying and holding different index funds, different ETFs, or even one ETF will put you ahead of the curve over most investment managers. Most investment managers suck major ass, all right? Just saying. And I think even I do, but I'm a long-term investor. I am 20% of my portfolio, full transparency, is swing traded, right? 80% of it, strictly buy and hold. Buy and hold breaks the mold. All right, here we go. I got all the cheesy shit tonight. I got all the cheesy sayings, but I wanted to go over this ebook tonight and make my mussy tight. All right, let's go over the rest of this. By the way, this ebook is accessible to anybody who wants it right on garzamedias.com. This is also a way for me to promote my website, by the way. I don't really make any money off the website. I want to try to find ways to, but honestly, I'd rather try to give out good information by just publishing little ebooks here and there, but I do want to publish more than 2 pages. That would be nice. Let's see. Where were we? Oh, yes. Understand risk tolerance. This is another thing. Know how much risk you can emotionally and financially handle before investing. That is huge. uh overall, because it's like it just depends on the person. Every individual is different on how much they can handle, right? By the way, none of this is financial advice. Says it on the website, but I'm also going to say it in the video because I, never know. Random guy on YouTube says, Tim, Grateful Ed says, what is an index fund? An index fund is basically an ETF that, what an ETF is, an exchange traded fund. So it's basically a fund that is ran by a fiduciary that holds usually an index fund typically, but there's other types of ETFs. But in this instance, an index fund is essentially a fiduciary that holds a certain amount of stocks or bonds or whatever, and basically holds them for the long term and allows you to get exposure to that diversification through buying shares of the index fund through an ETF. And I'm probably explaining that a little bit poorly because I don't always explain ETFs the best, but that's the easiest description I could give. So basically an ETF, think of it as a basket. Think of an ETF, which is usually an index fund, typically, but think of it as a basket full of stocks that you can gain exposure to by buying shares of that ETF. So let's say you have the VOO, which is the Vanguard S&P 500 stock market index one, right? If you buy one share of it, I don't know how much it is right now, maybe like whatever amount of dollars it is, you're gaining exposure to the S&P 500 index, that sort of thing. So it's really just a way for you to diversify without paying an arm and a leg to diversify is really the key. So Tim Smith says, I did almost all of them. I sold $25,000 worth and then used them to buy the HHIS ETF on TSX. Their first distribution is next month, 26% yield. It's made up of top NASDAQ single stock covered calls. Now, I will say this, Tim. You got to keep in mind, and I think that they probably run a little bit differently. I don't think it's 100% covered called. I hope not. But if it's are all of their holdings on the HHIS? If I can't really remember for some reason, are all the holdings straight up used as collateral for covered call contracts? I know it's an odd question because I think the thing is, I think having covered call exposure, kind of like covered call strategy exposure in a portfolio, I think it's great to have. Hopefully HHIS doesn't do a full out covered call, like maybe 25% of the holdings are covered call, that sort of thing. But yeah, hopefully it's it sounds, from what I researched, it seems pretty decent. I can never honestly, say for sure what the best thing is. They do a maximum of 50% covered calls, but right now they are doing covered calls on about 30% of the shares. That's good. Actually, 30%, using 30% of the shares as collateral for a covered call, pretty ethical. And honestly, that's nice. That's a good distribution because then 30% of your portfolio is making some steady derivative income, while 70% of it's just sitting there long-term and growing. That's fairly smart. I like that. But honestly, that's pretty cool. So Tim, you didn't really technically sell all your stocks. You basically got into an ETF that has a lot of stocks, and so you're still in the market. I was scared for a second, man, because as long as you're still in the market in some capacity, even if it's through the HHIS ETF, I think that's great. So honestly, the more exposure you get to the market, and I think, hey, covered calls are excellent. Covered calls can be great when it comes to income generation. Obviously, they're not, covered call strategies don't allow you to have growth over time. But if it's only 30% of the shares, that's great. I think that's fantastic. I'm not recommending this to anybody, but I think that's kind of cool. I'm still going to be the lame-o. I'm still lame. I just have a brokerage account full of all sorts of different ETFs that I have exposure to, and as long as I'm diversified, I'm happy. I can sleep soundly at night as long as I'm diversified. And honestly, from what you have on there, that sounds like a pretty good deal. Tim Smith says, I'm going from about 300 a month in distributions, was hoping to get to 400 by December, and it will be April, and I'll be at 580 monthly. trying to get to 800 monthly. Dude, that's fantastic, man. By the way, if you can get that level of dividend payout and it's fairly consistent, even if it varies a little bit, covered call derivative income can vary a little bit depending on, market fluctuations, that sort of thing. But honestly, pretty cool, my man. Pretty freaking cool. Let's see. Tim Smith says, I put it on a drip so everything gets reinvested. Sweet. Very cool. I see you just, and reinvesting in the same fund. I get it. I know that I'm not that way. I'm so weird. I don't do drip at all. Like, I think drip is great. I think drip is good if you're reinvesting into the same ETF that you're pretty much all in on. That's fine. I'm so into so many different individual stocks and so many different individual ETFs that my portfolio is not even properly weighted. It'll never be properly weighted. It's chaotic. But as long as I'm exposed to valuable assets, that's all I care about at the end of the day. It's funny, I'm exposed to covered calls, tons of covered call ETFs, tons of different index ETFs, you name it, man. I can't even name it. Well, maybe I can. Well, I got bond ETFs, commodities ETFs. I got them all, man. It's crazy. I have no formal retirement fund. My brokerage is my retirement fund. So my Schwab brokerage account, my Robinhood one, those are all basically my retirement funds. Those are technically my 401k. I don't necessarily recommend that for everybody, but the thing is, if I need money, I can get my dividends that I get from every month, and I can use that towards whatever I want. So that makes life a little easier for me. But I don't need to do that at the moment, but who knows? Maybe I will. Let's see. Tim Smith says, I thought about putting it all into MSTE, which is the micro strategy levered covered call, 47% yield. But it was just too much risk. MicroStrategy could crash at any time. So, by the way, sorry, I just want to apologize in advance to everybody. I'm not displaying any of the comments tonight just because, one, I'm too lazy to I'm just going to read off the comments and try to respond to them today. This is not going to be a very long live. I'm going to probably keep this as concise as possible today, but I want to try to answer questions and read off there's not much left of this ebook anyway. It's a very concise ebook. But yeah. Here's the thing, man. Here's the thing. That's the thing. Don't ever, I can't say this is financial advice, but this is just like, it scares me when somebody says they want to put everything into one thing. That's the trap. That is the trap. I think it's so bad to put every piece of all your dollars into one thing is a terrible idea. Even if you think it's a for sure thing. Like, when I say one thing, I mean like one company, So if you're putting it into like the MicroStrategies covered call ETF or whatever, that's a huge risk. I mean, you still don't know what direction that company's going. We all know, it's a gamble. I call it micro penis strategies, but here's the thing. I am so scared of putting everything I have into one single thing. Now, I could imagine, here's the thing. I would, if you gave me $25,000 right now and told me to put it into one thing in the market, I would obviously put it into an ETF. And what reason I say an ETF is because you're at least automatically exposed to anything you want to be exposed to through whichever ETF you choose. So I would choose the VT. If you told me, if you put a gun to my head and said, Michael, you only have one ETF, not one ETF, but just one single company or ETF, anything you want that you can be exposed to with this $25,000. I would choose the VT. You get international and United States exposure all in one ETF. That would be my one and done. But I don't work that way. I've got all sorts of shit in my portfolio. I got covered call ETFs. I got you name it, dude. Everything under the sun. But yeah, don't put all your eggs in one basket. That's probably the biggest. If you want to put all your eggs in one ETF, I think that's okay. As long as the ETF is fairly diversified and it's is decent for you and you feel like the risk profile matches what you're looking for, I say go for it. Always consult with a financial advisor, though. That's really my biggest thing. Always. Let's see. Tim Smith says my plan is to get somewhere near $8,000 to $10,000 a month and then turn off the drip and start diversifying into those funds at that point. But we'll see what happens. Tim Smith says MicroStrategy leveraged covered call is already in HHIS. Thought about going all in, but MicroStrategy's share price is directly tied to Bitcoin, so it could crash heavy at any time, and my $25,000 is gone. Exactly. I think MicroStrategy is really way too much of a gamble because it does a lot of its price movement is based on the clown market, which is what I like to call the dumb money, where people are just investing in, I wouldn't even call Bitcoin an investment, but I wouldn't even call MicroStrategies really. I don't even know what MicroStrategies does. I still don't know what they do. All I know is it's owned by Michael Saylor, and he consistently buys Bitcoin and then talks about it on podcasts and shit. Michael Saylor's terrible. Anyway, yeah, no, you don't want to be all in on one thing, though. Bad idea. But be in on multiple things. The funny thing is I have a very dip your toe in the water mentality towards every single thing I'm exposed to in the market. Do I get the best returns in the world? No, but I get positive returns. That's the point. I actually do come close to beating the market. I don't beat the market, but I come close. And that's good enough for me. I'm not out to beat the market. I'm out to be protected through diversification, through being exposed to multiple different asset classes, you name it. I think that the more asset classes you're exposed to, and the more diversified within the asset classes that you choose, which I choose them all. I choose stocks, I choose bonds, I choose everything. I want to be exposed to every fucking asset class because that's just how my mind works. I want that exposure. And usually I just do it through ETFs, which makes my life a lot easier. Because I'm not going to go out and fucking buy those bonds on my own. I'm going to use the ETF to gain exposure to the entire bond market. There's bond market ETFs, and those give me a boner. But yeah, Tim Smith says, if things go as planned, I'll be living a work optional life in my late... Dude, that's incredible, man. Honestly, anytime I hear somebody trying to go for their goals, like, I am all for it. Like, I support it, man. Because I think it's good to go for just. I'm sorry, I'm a little lost for words, man. Like, honestly, it just, man, I'm just stoked to hear that, man. Like, I get it. It's nice to know that you can have income coming in at any time and not have to worry about what your next job will be. I'm lucky, technically. If you guys want to know the truth, I could, by all technicality, work part-time if I really wanted to. I wouldn't say that would be the best idea for me to do, but by all technicality, I could work part-time and it would not faze me. Give me one moment. And yeah, and honestly, making it to where you don't have to work a dead-end job that you don't want to do, I think I'm all for it, man. And hey, get income in any way you can, brother. Especially passive's the best way to go. I love passive income, and everybody's always freaking out about the markets and stuff. Honestly, if you're diversified in enough strategies and different ETFs that do different things, there's no limit to how crazy your portfolio can get. So, good job, Tim. Tim Smith says, we've had a lot of restructuring at work. We got elections, government cuts, things are uncertain. So I was like, yeah, screw all this. I'm going high yield, concentrated for a period of time. I think that's smart, dude. I think that's probably one of the smartest. I'm actually considering something similar. I'm just going to say this right now. At my job, I think things are pretty uncertain. We had 2 people get let go today. I wasn't one of them. My performance has been good enough to stay. Thank goodness. I actually thought they would have fired me because sometimes I don't always kiss the ring to management. I called out some bullshit, let's say, that management was doing. And I was like, I called out some of the bullshit I'm just gonna, because I don't want to say what I do, but there were some expectations that I felt were unrealistic for everybody to accommodate to. Luckily, I was able to do it. I felt like I could meet the expectations, but there were a couple people who couldn't. And I think that those expectations were put into place to weed those people out, because I think they were doing good. Those people, the people, I just want to say this, the people who got laid off today from my job, the 2 people, I don't know who they are. I don't know who they are yet, at least. I'll probably find out here soon enough. I love there's one person I don't like on my team, and that's, my supervisor, who does all my one-on-ones and stuff. But she's luckily on vacation right now, so I don't have to deal with her. Yeah, I get that. The uncertainty factor is there. But yeah, two good people. I don't know who they are, but I like everybody on my team. I could tell everybody on my team does pretty good, high quality work. I've seen what they do, and they do good work. So, and they were basically, the company that we outsource for, was just trying to lower headcount. So what they did was they put the statistics up to an unreasonable scale. And I wasn't for it, man. I thought it was such fucking bullshit. I called it out a mile away too. I told my manager, I was like, look, and the only reason our client is putting this unrealistic expectation on us is so that way, 1, it'll force people to quit and give up, some people. 2, it'll allow them to reduce headcount by saying that these people were not meeting the goals. Yeah, so who knows? I don't know how safe my job is, to be honest, and that's okay. I'm lucky. I'm very lucky in the fact that I can do things like DoorDash or Uber Drive or you name it, right? I could do those things, and it's but at the same time, I do like the job I do. I get paid a decent amount, and yeah, luckily, like I said, I make money off my portfolio through 20% of it being swing traded. The rest of it, I just get dividend income from it, and just let it sit and never touch it. Let's see what Tim is saying though. Tim Smith says HHIS now has Eli Lilly, Meta, Microsoft, Palantir. Okay, so I'll tell you what, I don't really know much about Palantir, but it's all the other ones that you mentioned are pretty decent. Meta I question sometimes, but Amazon, Nvidia, Coinbase I question, MicroStrategies I question. I think Tesla's still a good company, even though they're going through some shit. Next month, they're adding AMD, Broadcom, Costco, Alphabet, and Netflix all levered. Damn. It's an interesting leverage cover call system. I love it. Well, I think it's good that you're getting some sort of exposure to high yield stuff. And dude, honestly, I get the skepticism, man. When you're working for a company, or because in your case, you're working, I don't know exactly what you do. I don't ever want you to tell anybody because I don't want anybody to ever give you grief. But I do know that you work for your government, and it's like, if they're going to do any cuts, man, you're making a smart move is all I got to say. I think it's smart. All I could ever really say, honestly, is really talk to a financial advisor, but what they have in the ETF you're exposed to that you own is pretty freaking good, at least in my opinion. It's pretty damn tasty. I might have to try to find a way to get a hold of this. It's a pretty good little interesting cover call, ETF. Tim Smith also says, yeah, a lot of uncertainty in the economy, elections, tariffs, AI, crypto. Soon have decided to move forward sooner rather than later. Hey, you're a smarter man for it, brother. You're a smarter man for it. That's all I got to say. That's and hey, you know what? Screw it. If you want, sometimes those covered call ETFs, man, they can give you some good high yields. And especially the cool thing about this is that only 30% of it is covered call. So 70% of it is untouched and left to grow. So I kind of like what you're doing. I kind of like where your mind's at. So I don't know. I'm into it. I'm fucking into it. Hell yeah. All right, where were we? I want to finish off my little mini ebook. This is not very long, by the way. This is so small like my dong. Let's see, where were we? Understand risk tolerance, how much you can risk, you can emotionally. Yep. Know how much you can risk, you can emotionally and financially handle before investing, and then of course beware of fees. This is another one. So high fees eat into your returns. Look, always check expense ratios and management fees. So like with you can usually check the expense ratios and the management. Well, you can usually see the expense ratios right on your brokerage account. As far as management fees go, you definitely want to look into that. There's usually like prospectuses and stuff for every single ETF that you get into. But yeah, be smart about it though. Any ETFs that you get into, definitely look up management fees. It's a big deal. I am not going to lie. I sometimes fail to look up management fees. I know. I'm a fucking hypocrite. But I had to add it though. It's smart. I do look at expense ratios though. I will admit I do look at expense ratios. But I don't always take a look at the management fees. I probably should be a little because the expense ratios and management fees, by the way, there can be hidden management fees in an ETF if you don't really look. It's really rare for that to happen, so I don't really, from what I could tell. But I could be wrong. Things change all the time, and I'm not always up to date on certain things. So it's always, like I always say, talk to a financial advisor, but look at the fees. If there are management fees, take a look at them. Let's see. Don't follow the herd. Just because everyone is buying something doesn't mean it's a good idea. We see this all the time. We see everybody trying to promote things like Bitcoin or let me try to get this bigger for everybody. Geez, I realize this is still kind of tiny. That kind of works. There we go. Don't follow the herd. Just because everybody's buying something doesn't mean it's a good idea. We see all the time people trying to promote things that really aren't valuable at all, like Bitcoin. I think it's a scam. I bet against it, but I also own Bitcoin, so I play both sides of it. I still think it's a scam at the end of the day. And yeah. So just because everybody honestly, usually the best rule of thumb is if everybody's already talking about it, you're probably already too late. That is sometimes now, not all the time. There are good companies out there that everybody talks about, like Coca-Cola. Coca-Cola is a little overvalued, but it's still a great company, pays a nice little dividend, a growing dividend, that sort of thing. So there are things that everybody talks about. Just don't expect 10x returns all the time. I think it's a good way to curb expectations to a degree, because everybody's always getting into something trying to expect that 10x, 100x return. And like, as much as I love people wanting that, it's not always the case. And sometimes it's more risky to go for things that promise you like the 100x returns. Now, I will admit, I think what Tim is doing is actually smart, in my opinion. I still think, obviously, talk to a financial advisor. Tim and I, we are not financial advisors. We're enthusiastic. First off, both Tim and I are both very enthusiastic about investing. I don't know who's more enthusiastic. It's not a competition. That doesn't matter. We both have our own investment philosophies, and it's fun. I actually really like seeing what Tim gets into, because it may be something I'm unaware of, and I like to try to dabble into it. Sometimes I even like to get into it if I can actually invest into it. But a lot of the stuff that Tim invests in is actually Canadian-based ETFs, and I don't think I can actually invest in them here unless I have like access to the Toronto Stock Exchange, which I think I can, by the way, through the Schwab, my Schwab brokerage account. I think I can. I don't know. Anyway, another thing is invest in what you understand. So if you don't understand how something makes money, don't invest in it. Look, most people can't tell me how Bitcoin is productive, right? How it's a productive asset. What does it do? And the thing at the end of the day is Bitcoin is only determined by its popularity. That's not an investment. That's a gamble, and it's a popularity contest. So you don't want that, not at all. Let's see, but yeah, invest in what you understand. Like you want to make sure if you got to know if what you're investing in is actually making money. When I invest in Coca-Cola, I know exactly what is. I wouldn't say exactly, but I know pretty damn well how it makes money. It makes money off of the soft drinks that it sells. It makes money off of bottled water. There's plenty of products. I understand the company. Invest in what you understand. If you don't understand it and you want to learn about it, learn. There's a lot of information. And so if there's a company that you want to get into, fantastic. Learn about it. Get into it. The cool thing is we do live in the information age. There's a lot of information out there, and you can really, really, really see if the company that you're interested in is worth understanding at all. Let's try to understand what you're getting into. Now, set it and forget it. Automate your investments and avoid checking them obsessively. Look, the thing that people get caught up in the trap a lot by checking. I'm sorry, I can't think today. So here's the thing. People check their portfolios a little too obsessively. I do, but I don't panic when the market crashes. Now, you could check your portfolio every day if you really wanted to. You just have to really tell yourself that just because the market's down doesn't mean I should panic and sell. That's never a good idea. I think panic selling is probably the worst thing anybody could do. If you're diversified, you don't really even have to worry in the long term. Obviously things can happen. Obviously society can crumble. Things can go to hell. Anything can happen, right? But I still think it's a good idea to invest one way or another. And I still think society is going to eventually go on the right path, hopefully. We are seeing a bit of a degradation in society. But let's see. Let's see. Tim Smith said, I think I was over-diversifying too early in the game. Once I get closer to 10,000 a month, I could probably reinvest half of that every month in other stocks and ETFs and set up a retire. Hey, man, honestly, income is the name of the game, dude. Income is the outcome. I'm going to repeat that. Income is the outcome, man. So if you're getting income, fuck, more power to you. Dude, straight up. So that's the one key that I learned from Money Master the Game by Tony Robbins. It's actually one of my favorite investment books because he interviews so many freaking investors. It's insane. Let's see. What else was I thinking? Sorry, I'm drawing a blank. I'm a little too tired today. I do got to go to bed early tonight. But yeah, man, honestly, I think what you're doing is smart, and I respect it. I do. You're focusing on getting an income from your portfolio because you're in an uncertain point in time that you just don't know what's going to happen with your job. I get it. I'm in the same boat right now. Like I said, I'm in the same fucking boat today, man. I got nervous because I thought I was going to be one of the ones fired just because I've been kind of vocal to management, and telling them what I'm, giving them a piece of my mind. But I've secured my spot because my stats have been really good. But I don't know. I won't be so lucky next time. Who knows? Maybe if they do another cycle of cuts, I might be fucked. So I need to prepare. Is really the key. At this point, I got to prepare for the worst, hope for the best, obviously, but in a sense, prepare for the best as well. Prepare for the best and prepare for the worst. I think it's good to do both. Try to set yourself up for the best outcome, but also realize that sometimes shit is not going to go my way, and I might get fucked real hard. So I don't know, So I get it, man. I get it, and I'm a little nervous too. That's why I've been doing the YouTube channel, because it's a potential source of income. I'm almost to the point where I can serve ads on my channel and actually get money. actually just get advertisement dollars. So hopefully that goes through at some point. But I get money from the podcast as well, not much, but hopefully a little bit more there later. But yeah, overall, it's no, I like what Tim's doing, man. I like what you're doing, brother. It's pretty sick. I like it. Let's see. Automate your investments. Let's see. Consistent contributions. Build wealth over time. Use automatic transfers to your advantage. Yes. Look, actually, I have not been following this rule, but I do encourage it. So the reason I encourage it is, one, I haven't followed it lately because I'm kind of preparing for the worst right now. So I've been swing trading in my portfolio, just 20% of it, to gain a little bit of extra income that I could use towards more long-term investments in the portfolio, so I don't have to use my own money to fund the portfolio, which is nice. I'm actually using dividend income and swing trades for income, which is really good. Honestly, it's been pretty good. Let's see. Another thing is to keep learning about finance. Educate yourself continuously, man. Just to make better investment choices. Because, look, I know that there's a lot of people who like what I promote, and there's a lot of people who don't. There's a lot of people who don't like my investment style. It's very odd. I am very overly diversified, and I'm happy that way. I like the over diversification. I like being overly exposed to as many different things as I can. But yeah, I think what Tim's doing is a pretty interesting approach. And honestly, I think maybe I should probably start thinking a little bit differently myself, maybe trying to go for a more income-based approach. But for now, I'm just, going to keep investing in real estate investment trusts and different ETFs, gain exposure to where I can, to what I can. I got a lot of bond ETFs. My portfolio is littered with different types of ETFs. It's pretty insane. But yeah, so keep learning. Like, learning is a big deal. Stay the course during volatility. So what does that mean? Look, at markets go up and they go down. Stay invested and avoid emotional reactions. Simple as that. Look, ups and downs will happen in any asset class that you get into. It just happens. All you need to know is, what are you invested in and is it valuable? There's more to that. But that's if we're going in generality speaking, is what you're invested in valuable? Then great. Fuck yeah. Can't argue with it. Let's see. Review your portfolio annually. That's another thing. So make sure your investments still align with your goals and rebalance if necessary. So what Tim is doing is actually smarter than what I'm doing. And I'm a hypocrite, by the way. But I wanted to put this in here because even though I'm a hypocrite, I still think that this is some sound advice overall. I'm just diversified. That's my real goal. My real goal is to stay super diversified and gain income from my portfolio. Yes. But at the same time, just be a long-term investor really is the key. Because I don't trust the dollar. I don't trust any currency at all. Save your assets, not your money. That's like my battle cry in this world. Let's see. Invest consistently even when it's boring. So yes, this is the part that people have trouble sticking with, and that is sticking to your plan, especially during the dull times. Sticking to your plan during the dull times is the key to long-term success. So dollar cost averaging is a great example. Dollar cost averaging into companies that you particularly love, not love, but know they're good, or ETFs that have a ton of different companies within them. Great. I love dollar cost averaging. I think it's smart. So invest whenever you can. It doesn't matter whether it's a bull market, it doesn't matter whether it's a bear market. Always invest. Like, that's really the key. And so if you have extra money that you can live without for a bit, invest it. Why not? Like, why not? Because you never know. It'll grow. But yeah, I'm an investaholic, man. Give me 1 second, Tim. I'm going to read your. Now, Tim Smith says, I'd prefer railroads, consumer products, etc., but NASDAQ could take off even more. Bitcoin could go up to 400,000. AI could be huge in 10 years, etc. But I will definitely rebalance at some point. Yeah, here's the thing, man. Like I said, I don't even follow really the rebalance rule that much. I don't rebalance. So it's in this book, but the reason I put it in here is because honestly, even though I don't, this is going to sound really stupid, but it is something that a financial advisor would tell you to do, is rebalance. I think it's stupid, but I think it would be irresponsible of me not to put it in there, because I think rebalancing portfolios allows you to kind of revisit things. Me personally, I already know what I'm invested in. I already know what ETFs I'm into. All of them. Any of them. My goal really is just to be diversified to every single asset class, every single anything stock related, anything bond related, any asset class, really doesn't matter. Fuck, you give me a bar of silver, I'd be pretty stoked. Actually, if you gave me I would buy a bar of silver if I had some excess cock money to burn, which would be sick. But yeah, holding on to things that are valuable, man, that's important. So I consider money not valuable, just assets. Now, assets that are cash producing are valuable in my mind, because especially if they could pay you a good dividend, income is the outcome, man. That is probably one of the biggest things, and I'm actually sad I did not put that in this book. That's okay though. That's okay. Well, this was very quick. This is a very quick one. Let's see. Now, look, real quick. So you want to continue your financial education. If you're serious about improving your investing skills, consider subscribing to a financial newsletter, following expert blogs, or enrolling in a personal finance course. Here are a few helpful resources. By the way, I snuck in my YouTube channel into this ebook. Here's some helpful resources though. Bogleheads.org, Morningstar.com, Investopedia.com, YouTube channels like The Plain Bagel. I think The Plain Bagel is actually a decent channel for the most part. I have to admit, if you're going to learn from any YouTuber, Plain Bagel's pretty decent, but sometimes he pisses me off. Or The Michael Garza Show. Books like Boglehead's Guide to Investing or The Intelligent Investor. The journey to better investing is ongoing. Take the first step today. All right. I hope you guys enjoyed that stupid little ebook. So yeah, overall, look, I mean, what Tim's saying is, Tim, you could be right, man. Bitcoin could go up to 400,000. I could be so fucking wrong. That's why I'm glad I got into Bitcoin early. I know I bet against it, and actually a lot of my income has come from betting against Bitcoin, oddly enough. But yeah, no, I do enjoy, as much as I'm okay with holding Bitcoin, I still don't think it's the future, but I could be wrong. There are plenty of things, there's a few things I've been wrong about in life. But yeah, no, I think your strategy is pretty sound, man. I mean, would I do it personally? I'm not really I'm a one woman kind of man. I'll give you an example. I'm a one woman kind of guy. But when it comes to ETFs and stocks, I'm exposed to all of them. I'm a multi ETF man. I'm a multi stock man. I can't help myself, man. I got to dip my toe in the water when it comes to ETFs and stocks. It's just kind of the way my brain operates. And as much as I would love to put all my money into one single ETF that gives me a high yield, and honestly, 30% covered call is not bad at all. I should probably reconsider a little bit, But I do. It's funny because I do have covered call ETFs in my portfolio, which actually give me a monthly income. And they're usually ETFs that are exposed, that like do covered calls on like S&P 500 indexes and shit like that. It's pretty cool. But yeah, for the most part, I think As much as I love covered call ETFs, man, it's like, I mean, I'm happy that it's 70% of it's not covered call and 30% of it is. I think that's kind of cool. So, yeah, rebalancing is optional, by the way. I think rebalancing should be optional. Really, the thing is, talk to a financial advisor, though, and see if rebalancing is right for you. If this feels like a drug ad right there, that felt like a drug ad. Talk to your doctor to see if rebalancing your portfolio is right for you. Yeah. But, oh man, hold on. I'll be right back. I gotta get. Oh. Let's get a little apple juice real quick. Oh. But yeah, overall, Tim, man. Um, to be honest, I mean, I do like some of the companies that are in there, though. I think it's like a mixture of innovative companies. And look, I love innovative companies, man. I like Meta. I like Tesla. Stock's definitely volatile though. But volatility sometimes is the name of the game. It just depends on what the company's actually doing. What is the company doing overall? Are they profitable? Will they be profitable in the future? I'm kind of one of those types of dudes that's like, hey, show me the cash flow. I need to see the cash flow. Are you making money as a company? And I need to know if you're a valuable company. And do you pay me a dividend? And if you don't, well, maybe I should find a covered call ETF where I can at least make some derivative income off of, using your company as a collateral, using some of the stock as collateral, I should say. Let's see. Tim Smith says, thing is, this ETF is brand new. April is its first distribution, so I made a quick on the fly call, like going with a hot rookie player over a veteran when your team is down in the series. Hey, sometimes the rookie can get the job done just as easily, as long as they're talented enough, but sometimes the pressure can get to the rookie. That's one way to look at it. But sometimes, man, look, if it gets the job done, it gets the job done, man. So it's, for me personally, like I said, I'm a diversification-aholic. If there was like a diversification anonymous group, and I would probably have to go. Like, if it was a problem in society to be diversified, like, I would probably have to go to a diversification anonymous, like, not course, but group. Yeah, I would have to. I got a problem. I'm addicted to diversification though, dude. And like, bad. I love exploring all the different asset classes out there. I love ETFs that give me exposure to like precious metals and other commodities like oil. Oh my god, it gives me an erection. But yeah, I think when you're exposed to different asset classes, I think you're always going to be okay. Your portfolio is always going to be sound. But at the same time, dude, with uncertainty, sometimes you just need income. And your income-based strategy, man, I'm for it. I think it's cool, dude. It's not what I would need to do at the moment. I'm too much of a pussy. I'm too much of a pussy. But I think what you're doing is pretty bold, man. I think it's a bold move. And it's not a bad one either. Because there's some good companies in there that they're adding to it. I like the fact that HHIS is adding other companies to the fold, which will help with the growth of the overall fund. So you want growth and you want income. And honestly, having 30% covered call, that gives you the income. That's pretty sexy. So to Tim Smith, let's all give him a kudos. Bram Mulder says, "Hey man, I bought now for 5 months 5 ETFs, but I want to know what is the best way now to make money on the stock market." Look, honestly, I'm not going to give any financial advice, obviously. None of this is financial advice, but I love betting against Bitcoin because Bitcoin's a Ponzi scheme in my mind. That's one way I actually make some side income from the markets, on the markets. I don't know how I would say that, but I don't know what to say. Anytime somebody tells me, like, what is the best way to make money on the market, dude, I don't know, man. I don't have I will say I have no magic pill. I have no magic Viagra pill that'll give me the knowledge I need to find the next 10x stock. I don't know what the next 10x stock is. I don't even know what the next 10x anything is. Like, all I know is that I want to have a good portfolio. I want to preserve my wealth. I want to be exposed to as many different asset classes as I can. I don't trust the dollar. I don't trust currency in any way. So I trust assets more than currencies. I'd rather hold currencies than hold dollars. No, sorry. Whoa, hold on. Back up. That was the dumbest statement ever. Reverse. I would rather hold assets than currencies. I'm an idiot, man. See, this is what happens when I'm tired. So what happens when I'm tired, but I always save my assets. I'm always holding my assets, except for 20% of my portfolio. 20% of it is swing traded. 80% of it is buy and hold, whatever. Yeah. But it's up to you, man. Look, I think buy and hold breaks the mold. Buying and holding is the best way to do it. And honestly, you say you have 5 ETFs. Look, if you want to know the best way to make money on the stock market is, don't try to be a gambler about it. Only a gamble. So here's the thing, and I'm not. This is a bit of a diss, only because I didn't like the question, and I'm going to be a little critical of you, but this is not to be mean. Seriously, I say this with love. I'm just like Lex Friedman. I say it with love. All right, but no, I am saying this with love. It's not the question of what is the best way to make money now. That's too short term. Look, obviously it's good to want to make a little bit of income from the stock market. Yeah, that's fantastic. But if you're trying to make money now, the thing is, you're thinking in terms of gambling. A gambler thinks in that way. I think the best way to phrase the question, and this is my opinion, by the way, the best way to phrase the question would be, how can I make money in the next 6 months, right? Now is too short of a time frame. But if you were maybe expand to that, 3 months, how can I make money in the market in 3 months? That would at least give me some time to work with, right? So time, you want to give yourself time is really the key. Day trading is stupid. I really believe day trading is the dumbest thing in the world. Swing trading is appropriate because there's no time frame for how long you hold on to whatever you're fucking holding on to. So with swing trading, I swing trade what's called the S-bit. This is not financial advice. Don't even take it as that. But me personally, I like to swing trade the S-bit because it allows me to bet against Bitcoin. It allows me to profit off the downfall of Bitcoin. So I buy S-bit on the dip when it dips, right? And then if it continues to dip, I continue to buy a little more here, a little more there. And then once Bitcoin crashes, then S-bit goes up, and then I, sell a little here, sell a little there once I'm making profits on that. And then after about a month, usually it takes about a month. So I guess you could say I make sometimes 2 months. Let me just say that. Sometimes it takes 2 months to make a buck on there. But yeah, you can make money swing trading. I'm not saying you can't. But in the terms of how to make money right this instant, it's not that quick. Do not delude yourself into thinking it's that quick. It's not. It could take. So not even swing trading can take about a month. to get good results, depending on what you're swing trading too. Sometimes what you're swing trading matters just as much as swing trading itself. So there's variables that go into it, man. But make money now, I don't know. I know how to make money in about a month or two. Using whatever money I have at my disposal. But I may be taking your question a little too literally, and I'm sorry about that, brother. I tend to overanalyze things, and when I'm tired, I definitely overanalyze. So, just want to let you know, none of it's. I just try not to think. Try not to think like a gambler is all I ask. Don't be a gambler. Try to be a long-term investor. But look, if you have to swing trade to get a little extra juice to your portfolio, go for it. That's fine. You can make money off volatility very easily. Like I said, I make money off of the downfall of Bitcoin. I make money off of its volatility. And those violent swings make me a pretty penny sometimes. It's not always guaranteed, but it makes me a pretty penny. Usually after about a month. Usually. No promises. Sometimes it could take 2 months. Sometimes you have to play a little bit of the waiting game. But yeah, when it comes to swing trading, I have no time limit. Like I said, I have a goal. I would like to try to maybe start making a little more income bi-weekly, with my portfolio when it comes to the 3 ETFs that I swing trade. Because I swing trade only like 3 ETFs, and that's the BIDI and the SBIT. Those both, like I said, bet against Bitcoin. And then the other one is just a Schwab large cap ETF that I swing trade. And anyway, I'm going on and on. What I'm trying to say is that 20% of my portfolio is swing traded so I can generate income from the swing trades. 80% of it is long-term holdings, mainly just ETFs and individual stocks. And then boom, those grow. And the other 20% I swing trade, I make money off volatility. That's how my portfolio works, and I'm sticking to it. I love it that way. Sorry, I talk too much. I really do talk too much, man. But it's fun. It's a way to do it. It's not the way. It's not the way. It's just a way. There are plenty of ways to do shit. So there's plenty of ways to invest. There's plenty of bad ways too. Don't go for the bad ones. Try to look for the good ones. I would say a lot of my investment strategies are a combination of different investor styles. I don't know. I like to try to blend the strategies of the best investors and try to blend them into a very creative investing style. I still don't know if, I'm sure there are other people who do what I do in my style of investing, but for now I'm going to be an egomaniac and just say it's called the Garza method. But it's somebody's probably already I've stole this by accident from some other investor, I'm sure. I've analyzed a lot of portfolios too. Portfolio theory as well. I love portfolio theory. It's fun. I'm a nerd. I'm a fucking nerd at the end of the day. So I can't help myself, you guys. Tim Smith also is saying, also I had to learn to not be emotionally attached to stocks. One of the ETFs I sold, I've had since July 2022. I might buy it again at some point. For now, I had to cut it loose. You can't be emotional. It's understandable. Yeah, I mean, I guess you could. See, here's the thing, man. I try not to even really look at the internal components of my portfolio. Like I said, I've got a lot of ETFs. I've got a lot of individual stocks. I know what they were when I got into them, and I usually just buy a share of each. So I usually just set them. I forget them. I don't even keep track of them. I don't even know what they're doing right now. I don't know what the price movement is. I do like to try to keep up with the dividend distributions, that sort of things, but that's about it. Yeah, overall, I think paying too much attention, and it's good to pay attention. You got to know what your portfolio is, but looking at it obsessively and, getting emotionally attached to any ETF or any individual company. You know, if you have if there's some value to it, you really love the company, you're thinking, damn, like Coca-Cola, I love Coca-Cola. Like I still have the Coca-Cola stock that I first invested into. Um, when I started investing like back in 2017 or whatever. I think it was 2017 when I started investing. Anyway, it was around that time. And that was one of the first companies I invested into was Coca-Cola. I was really happy about it. And I still have at least one share of Coca-Cola and at all times in my portfolio just because I love the company so much. So yeah, I understand there's a bit I think it's good to have a little emotion to it, but not be overly attached. I mean, I will say this: I will not sell my Coca-Cola stock just because I know it's a good company, and also I love Coca-Cola products, and I'm a Coca-Cola shill. That's all I can say. Also, my brother works for Coca-Cola, so so I like to support my bro in any way I can. So, me being a shareholder, I'm technically on my brother's boss. I just realized that. I already realized that before, but I am my brother's boss because I own a share of Coca-Cola. I'm a shareholder. I'm a part owner. So Brandon, my brother, answers to me. Anyway, though, but yeah, no, it's good to sometimes cut loose. You got to kind of figure those things out. I get it, and I think it's good. Here's the thing: I think it's a lot of people say don't invest without emotion. I kind of agree with that, but I kind of don't. So I believe there should be emotion in investing, but not excessive, It's just like hard liquor. I think sometimes a shot or two every now and again is good. It's all right. Kind of resets the system. Probably not the best thing in the world. But you're not going to croak over. Now, if you have like 10 shots of like vodka or something, oh boy, watch out. You know what I mean? Like, I think of emotion in investing in the same way. I think you can have a little bit of emotion. I think it's good. I think it's healthy. It's sometimes I get it, worrying about where the direction of the market's going to go, like what's going to happen to the US, what's going to happen to Canada, what's going to happen to this country as a whole. Sometimes we get scared. And we also get attached to what we invest into. So I think a little bit of emotion's okay. But it's up to you. It's okay to be an emotional investor. I think it's great. There's a lot of successful investors who are very emotional. So you could be a successful investor and be emotional. So I think I'd like to try to encourage that. If you feel like you can handle being emotional, and if you feel like you have to shut off your emotions when you invest, shut them off. You know you better than you. Sorry. Whoa, hold on. Wait a minute. That might have been the worst. Did you guys? I don't know if you guys heard what I just said. Well, hold on. Did I say you know you better than you? Yeah. So I guess that wasn't the worst. I don't know. I can't think. Anyway, what I'm trying to say is that you know yourself better than anybody else out here. So you know what the right amount is, right? I think you do. Whether you want to go full on emotion, little bit of emotion, that sort of thing, it's up to you. But I'm overstating the whole thing. But yeah, invest, man. I think it's great. But yeah, I got to admit, my future feels a little uncertain right now. I'm kind of just getting rid of things, after what happened today with my job, and I didn't, like I said, I didn't lose my job today, but man, cutbacks seem to be happening. And it's unfortunate. And it probably won't be the end of it either. So there may be a video eventually where I actually let you guys know that I am no longer working for the company I work for. But I'm already kind of one foot out the door with them anyway, because I hate to say it, but I really don't trust the company I work for anymore. It's sad. I want to. I really want to. But I just kind of can't. So, I don't know. It sucks. And I guess you could say, I guess a part of me's grown emotionally attached to the job that I work at. And I think that might be it might be a tall tale sign for me to leave the job that I'm at, you know? I never thought I'd be ready to admit that. But maybe it would be a good idea for me to just cut it loose, you know? But, you know, I mean, I have a job now. Why go and search for another one, you know? I try to keep that in mind. I'm getting paid decently, you know, and I've got a lot of years of experience doing this call center job, this call center work. And I guess the question is when should I walk away? You know, and I just want to I do want to say to the two people, I still don't know, even if I did know who got fired, I'm not gonna say their names because that's disrespectful. I think I just want to say to the two people, whoever got fired, whoever got laid off today, I just want to say from the bottom of my heart, I'm sorry. Even though I had nothing to do with the decision, like I didn't go in there and fire him, obviously, but like I'm genuinely sorry that I think our management sucked a little bit. A little. I think not completely, you know. But I feel like they made a lot of mistakes. And the company that we do business for is I'm trying to keep this so vague. Anyway, I just want to say this to the people who got laid off today at the company I work for. I, I don't even know who it is, and that's why it sucks. I just feel bad for them because I know that they're because I all my colleagues that I work with, like I said, besides the supervisor who does my one-on-ones typically, they've all been very kind. In fact, probably too kind to me. More kind than I deserve. You know, and it's a work from home job, but they're nice, they're kind, they try. You know, and um so I just want to say to those people, I don't know how I'm still working there. I mean, I know my look, I know my stats are good. I will admit that, but like I feel like I've been the worst role model of an employee. I'm very willful. I'm an independent thinker, yes, but like I'm willful, and like I got a lot of. I guess I'm feeling guilty. I'm feeling tinges of guilt that I didn't get fired today, right? I know that I work my ass off. I know I come in every day and I know I do a good job, but still, why them and not me, right? What did they do to deserve that? And I have a feeling it's bullshit, whatever it is. Because we need the bodies, and I know that they're experienced and they could have gotten better at what they were doing. So, whatever management's reasoning behind having, I understand that like companies have to sometimes lay people off because they're trying to lower their budget, blah, 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 blah. It's bullshit. It's bullshit. And I'm upset. I'm extremely upset. Because those two people, and I know all the colleagues. I don't know them personally, obviously, but I know that they have families. They have people to feed, or if they live on their own, they have to feed themselves. But they have a life they have to lead, right? And I felt like they just weren't given enough warning. It's not right. I felt like they were productive enough. Even even our lowest performing people are still pretty damn productive. We don't have that many people. So I'm upset. I'm actually really upset, to be honest. Like, and who knows? Maybe I'm on the chopping block next. I wouldn't be shocked. I wouldn't be shocked. But here, I'm not going to give him a chance. I may be unlikable. I'm not going to lie. I'm very unlikable. But I'm also really fucking productive. And I'm a force to be reckoned with when it comes to my productivity. So it's going to be fun. It's going to be interesting. Few weeks. I definitely got to be on my A game. And yeah, that's all I could do is be on my A game, you know. I gotta text my boy, the Eagle. He's wondering if you think after work tomorrow you can add second me to the tribe. Gotta get my boy added to the tribe. But yeah, I'm having a tough time. When people are affected negatively, man, it sucks. I understand layoffs happen though. I get it. Don't agree with it though. Not at all. Anyway. Um and anybody but before I go, I am gonna start winding down here in a bit. I want to, if anybody has any comments, questions they just want to say on the chat real quick, shout it out, brothers, my brony brothers. I'm gonna try to do a little more game streaming, a little more Arc. I'm trying to stream that game a little bit. It's pretty fun. I'm actually really enjoying the process of streaming that game for sure. I don't know if anybody I don't know if anybody's really on at the moment. Let's see here. Let's see. Tim Smith says Garza might lose his job. I'm shorting Capri Sun tomorrow morning, going to cash in big on this. Hey, man, I really do think it's crazy because I actually might. Like, I really do think that's down the pipeline. Like, even though I have pretty good stats, I'm sure at some point. Sometimes I wonder. I just wonder if I'm shocked. Like, I really was shocked. Like, I knew my stats were good, but I was expecting to be let go today because they had this little meeting, right? They had this little meeting, and I was like, "Oh shit, dude! There's a group of people in this meeting, and there's other colleagues." And I'm like, "Fuck, we're all getting fired. We're all getting told that we're getting fired. Shit." That's my first thought. That was my first thought in this fucking meeting. I was like, well, I guess I could sign up for unemployment or something. It's one of my other thoughts. I don't know if I would have qualified or anything. It just depends. I think I would if I, lose my job. But I'm lucky. I still got that whole DoorDash thing and Uber Eats and shit. But yeah, that's is a real possibility. Who knows? It could happen a month from now. Like, it could happen at any time, dude. Like, so I just gotta, every day that I come into work, I gotta pedal to the metal. I gotta work my tail off, and we'll see what happens. Hopefully everything goes through smoothly. I took I've been taking a lot of calls lately, so I've been taking 70, 75. So I'm taking a good amount of calls. I think that might be a little exaggerated. I think I got up to 68 calls today. So I take a lot of calls on a day-to-day basis, either way. But if I need to up my game, I'll up my game. I'll do shorter calls. Why not? But I will say this to anybody who works a call center job, or any job really, but since I can only really speak on call center jobs, don't let them intimidate you. Spruce up your resume. In fact, I need to spruce up my resume because I never can trust. It sucks. I really do have trust issues. Tim Smith is saying, watch a few seasons of The Apprentice to learn how to survive the boardroom. Oh my God, that's funny. But no, overall, look, I'm lucky in the sense that I do have other ways of making money, like DoorDash, and which anytime I do DoorDash, I actually do make an okay amount of money, passable. It's enough for me to easily thrive on if I just worked a couple extra hours a day. But yeah, and honestly, not only that, I got plenty of call center experience, so no matter what happens, I will say this, I always have some form of way of gaining employment in any entry-level call center position, because I've been doing this shit for a long time. I just don't feel like, I as much as I love learning new things, I just don't feel like learning another program, another client. For instance, honestly, I could jump into just about anything and learn it, but I feel like I've been burned too many times. But yeah, I mean, honestly, I don't even know how much I feel like doing call center work anymore. I may be good at it, but at the end of the day, I'm just ooh. But I'm going to keep doing this job to the best of my ability. Hopefully give them no reason to fire me. And I'm going to be the greatest investor of all time. And I'm betting against Bitcoin. That's been an extra source of income for me. I want to try to pay off my car loan as quickly as possible too, so that way I only have to worry about rent and food and shit. But yeah, boy. But yeah, honestly, I should watch The Apprentice though. There's a lot of seasons of The Apprentice out there. I should probably watch that show again. I only watched a couple episodes too back in the day, so I never watched the full series. I definitely should get acquainted. But anyway, I want to thank you guys. Thank you, Tim Smith. I appreciate it, brother. Thank you, Bram, for getting in on this. As always, my biological stepson was on here earlier. But Tim, I really want to say thank you, brother. But also to Ty Lord, my biological stepson. Stop drinking all my baby oil. It's not right. You shouldn't be digesting that. Just saying. Let's see here. And then, but yeah, no, Tim, thank you for participating in the chat, man, for really, my brain is so malfunctioned tonight, you guys. I'm sorry. Tim, why can't I speak? Sorry, I really am so tired. I really am just burnt out. I'm a little stressed at the moment, if you guys could tell. And when I get stressed, I sometimes malfunction a little bit, but I think I'll feel better after a good night's sleep. But yeah, man, I got to watch some Apprentice. But no, thank you, Tim. I appreciate every time you get on here and just contribute like crazy. And I also just love discussing shit with you, man. I love picking your brain. I like it when you pick my brain. It's not meant to be gay, But no, I really do enjoy just conversing with you, man. Even if it's just me looking at the chat screen and just kind of trying to answer questions and shit. I prefer actually talking to you on video chat, but I'm on a limited amount of hours for StreamYard, unfortunately. I think, well, I'll have to do a StreamYard episode here pretty soon, actually. Only when you're kind of available. Only when you feel like you're available, though, for it, man. Only when you feel like you're available and ready to roll. But anyway, catch y'all later. I'm gonna wash my mussy. I'm gonna wash my mussy with the bussy, and I'm out. Later, guys.